Dear students, we'll solve one more problem on application of minimum alternate tax in the assessment of companies. Here, profit and loss account is given of E Limited, and followed by that some additional information. We'll take up the additional information, and side by side we'll also take up the items of profit and loss account. Value of plant and machinery owned by company is 65 lakh. Actually, this information is required for the purpose of calculation of depreciation. But in this problem, depreciation amount is given, therefore, this information is of no use for us. So this is just a piece of information which we cannot use in solving the problem. Ignore it. GST of 1819 paid during the year 95,600. So it is paid on payment basis, and that even though it is relating to last year, it is allowed on due basis, payment basis. Therefore, that is very much allowed. So it should be deducted. It's not debited here. Therefore, it is deductible from net profit. Then depreciation under section 32 is 7,35,000. If you look at the debit side here, depreciation amount is 6,75,000. Whereas what is allowed is 7,35,000. So what we have to do is, we have to add back this value. We can add, then deduct what is allowed, or else the net amount. This is more than that. Therefore, further deduction is required. Net amount can be deducted from the net profit. Only one treatment. Or else add once, deduct once. Deduct what is allowed under section 32. Add what is debited to profit and loss account. Then unabsorbed business loss is 12,20,000 for income tax purposes, and for accounting purposes 10,10,000. Loss brought forward from assessment year 2018-19. Unabsorbed depreciation for accounting purposes 3,45,000, and for income tax purpose unabsorbed depreciation is 18 lakh. See, while computing business income, we have to consider brought forward business loss and unabsorbed depreciation, which is meant for income tax purposes. So here 12,20,000 is this value we have to consider while calculating book profit. Similarly, this one, unabsorbed depreciation for income tax purpose 18 lakh. These two values you have to consider while computing business income. See, this amount should be set off only against business income, whereas unabsorbed depreciation can be adjusted against any other income except salary income. Therefore, this you have to utilize fully, and then if there is surplus of business profit, you can adjust this one also. Okay, we'll take it up a little later. Then, what is meant for accounting purpose, 10,10,000, and this unabsorbed depreciation for accounting. So what is given for accounting purpose? So that should be taken while computing book profit. So this value or this value, whichever is less, is deducted from net profit while computing book profit. We'll once again recollect this and consider book profit. Okay, of the customs duty due 21,000. If you look at here the debit side, you have got an item customs duty due 21,000. Of this, they have mentioned 10,000 remained unpaid. So what is paid is 11,000. So 11,000 is allowed, 10,000 is disallowed. So 10,000 should be added back. So this should be paid before filing the income tax returns. In the case of companies, normally 30th September is the last date of filing the income tax returns. Purchases include one item wherein 25,000 was paid in cash under one payment. Single payment should not be paid in cash beyond 10,000. So here it is 25,000. Therefore, that is fully disallowed, not anything above 10,000. So if the amount involved is more than 10,000, entire amount is disallowed. Okay, it's about the adjustments. Okay, look look at the debit side, I'll tell first of all regarding computation of business income, which is part of total income. So depreciations, so purchases include one purchase of amount more than 25,000. So 25,000 which is included in purchases, this should be added back, 25,000. Entertainment expenses allowed, traveling expenses allowed, depreciation should be added back, and what is allowed under section 32 should be deducted. Income tax, wealth tax, customs duty due, that is unpaid value, that is 21,000 minus 11, 10,000 which is unpaid even after filing income tax return, that should be added back. Provision for unascertained liability, proposed dividend, provision for loss from subsidiary company, these are all to be added. Tax consultation fees allowed, salary TMD is allowed. Okay, then on the credit side, this is allowed, this is also allowed. Amount withdrawn from general reserve is not allowed. This should be deducted both in the case of computation of business income as well as book profit. Now let me tell you the treatment of the items in the computation of book profit. So what are to be added back from these items which are debited to profit and loss account? This is allowed, this is allowed, this is allowed. Depreciation is not allowed. Income tax is not allowed. Wealth tax is allowed. Customs duty due, it is allowed. Provision for unascertained liability is not allowed. Proposed dividend should be added. Tax consultation fee is allowed. Provision for loss from subsidiary company is not allowed, therefore it should be added back. Salary of MD is allowed. Net profit is also starting point. You know it very well. So this is regarding the treatment of items in the computation of business income, total income, and book profit. Now let us see, or let us go ahead with the computation. Already I explained everything. Just a recap of what I have explained. So net profit as per profit and loss account. We are computing the business income here. Actually, business income need not be computed separately. There could be part of total income. That could be part of total income computation. In the single statement you can do, but in that case, total income statement will be overloaded with the so many calculations. Therefore, we are going for separate calculation or computation of business income. Okay, net profit as per profit and loss account is 19,38,000. Disallowed expenses, depreciation, income tax, wealth tax, customs duty unpaid, still payable 10,000. Provision for unascertained liability, proposed dividend, provision for loss from subsidiary companies, then single cash payment about 10,000, together 13,15,000. Deductible expenses and losses, amount withdrawn from general reserve, depreciation under section 32, and GST of 2018-19 paid during the year. So this is allowed on payment basis. Therefore, total amount is 10,30,600. So from the previous total of okay, yeah, total must be written. I forgot to write, so this should be corrected. Okay, from the total you have to write here, and you have to add to this, and therefrom you have to deduct 10,30,600. Anyway, net amount what you get is 22,22,400. Of that, see, you already understood here unabsorbed business loss for income tax purpose 12,20,000. So to the extent possible, you have to make use of it. So here what can be written off? So entire amount can be written off because 22,22,400 is there. So 12,20,000 can be set off. After that, what is remaining is 10,02,400. Now you have got depreciation here. Depreciation amount, unabsorbed depreciation for account income tax purposes, 18 lakh is there, but entire amount cannot be absorbed here or set off here. So what is possible, that much you can set off. So unabsorbed depreciation 10 lakh 2400. This much can be set off. As a result, the balance is nil. In other words, in this problem, business income and total income is nil because there are no other heads of income. If you look at the credit side of income and profit and loss account, here no other income is there which is related to other heads of income. Therefore, have written computation of total income for the namesake, so nothing is there, so total income is nil. So here is a note: business loss carried forward is set off first against current business income. Unabsorbed depreciation is adjusted towards balance of income to the extent possible. Okay, now computation of book profit. I have already explained all these things. So 19,38,000. So all these items to be added back. Remember, depreciation 6 lakhs, same thing should be deducted, not the depreciation allowed under section 32. That is not to be taken. Only you have to exclude. What you have to exclude here is depreciation on revalued assets, but here it is not applicable. Therefore, what is added, same amount is deducted. This point you have to remember very well. Then amount withdrawn from reserve, this is not allowed in both for computation of business income as well as book profit, so it should be deducted. Then brought forward business loss or unabsorbed depreciation for accounting purpose, whichever is less of the two. This one is less, 3,45,000, so that should be taken. So total of these things is 12,20,000. So net value is 19,86,000. So these are book profit. So total income is nil. These are book profit. Now what is the rule? Tax liability is equal to tax on book profit, tax on total income, or tax on book profit, whichever is higher. So which one is higher? Very easily you can tell because there is no tax on total income. Tax on book profit at the rate of 15% on this value. It comes to 2,97,900, and no surcharge is applicable. Therefore, health and education cess at 4%, 11,916. Together 3,09,816. What is tax liability? Tax liability is equal to tax on total income or tax on book profit, whichever is higher. Here this is nil and this is 3,09,816. Whichever is higher. So this one is higher. So this is the value. Some notes. MAT credit under section 115 AA is available to the extent of 3,09,816. Why? Because tax on total income is 0. So the entire this one is tax credit. GST is deducted in the year of payment on payment means. Customs duty paid before due date of filing return is allowed. Balance is disallowed. Out of 21,000 11,000 is paid. Therefore that is allowed. Remaining 10,000 is disallowed. Where the payment exceeding 10,000 is not made by online transfer, crossed check or crossed DD, entire amount is disallowed. Tax consultation fee being expense in connection with income tax proceedings is fully allowed. Value of plant and machinery owned by company is rupees 65 lakh given in the problem should be ignored as the depreciation allowed is given in the problem. So that's all. Thank you very much.